in your list of the heavyweights that you have an exposure to. In fact, if anything, you've got a little bit of exposure to Tata Power. Why is that? Too stodgy, the stock?
No, we do have exposure to NTPC if you see the latest portfolio. It's a matter of timing the purchase and relative valuations of the sector and where in the cycle we are with respect to market sentiment and expectations. Currently, the market conditions call for a more defensive orientation, and we do have that in our portfolio.
The other stock conspicuous by its absence in the top 10 is Bharti, the stock in the news this morning. Apuva, have you taken a call to go underweight on that sector relative to the benchmark in your large cap fund?
Yes, we have been underweight on telecom sector for a while now because of the pricing pressure that is evident and the number of players competing for the same pie. The growth has also been a bit suspect given that there is a phenomenon of multiple SIMs. But we do believe that in the coming 2-3 quarters things will settle down, and once 3G auctions happen and the consolidation is allowed, things will look up for the leadership of the sector. So we're keeping our fingers crossed and keeping an active watch on that space.
Naganath, we've been hearing a lot of thanks but no thanks from many investors regarding these FPOs. In any of your funds, have you guys looked to increase your exposure via the follow-ons?
We have, and we will continue to do so. I think it's all circumstantial on a case-by-case basis. If the fundamentals look good, we certainly do participate quite actively in these offers.
What's your view, keeping global things in mind, Naganath, of 2010 and how things might actually get split out between the first half and the second half?
My belief is the first half will be choppy, globally that is, and the second half could perhaps lead to a slightly better trend. And we're already seeing signs of that in the first half, at least with regard to all these sovereign issues, which were talked about towards the end of last year, but which have come upon the markets far more quickly than anybody anticipated, say, late last year. And I think everybody is familiar with the problems with some of the European countries, the deficits and the financing packages required. I think that will occupy center stage in the coming weeks. And I think if the financing solutions are seen to be adequate, markets will be stable. If they are not, then we could see a decent correction in the markets.
How would you define a decent correction? We've had 10% already, Naganath. Do you think another 10-15% is likely or conceivable?
See, I mean, if in the case of Greece in particular, if in the coming week I'm told that there will be better details available of the financing package put together by the European Union, if they fall short of what the market is expecting, then I think one could expect 5 to 10% correction globally in equities.
There was a fear till last week that has abated somewhat, Naganath, which was that most global markets will be headed towards their 200-day moving average. Some did and some didn't, like us. Do you think that as well is a possibility?
Well, that depends on individual charts of different market indices. But like I said, the expectations are that the bigger countries in Europe will put together a credible financing package. And I think we will get to know sometime, I'm told, later this week. But if expectations are high and the outcomes are seen to be well below expectations, then I think there could be some degree of negative sentiment that creeps into the stock markets.
Anup, how are you guys approaching the budget in that case? Any key expectations from the event? Are you just kind of circling around it and then you'll take a call post the event?
So, Mitali, we don't do too many portfolio adjustments, frankly, around specific events like the budget. As we've seen it over time, the budget is becoming less and less relevant as a major policy tool. Of course, it is important, but there's a lot that the government does beyond the budget as well. And you can't really move your portfolio around based on one event. I think we have to take a longer-term call on most of our individual stocks and sectors. So, there may be a little bit of tactical positioning around it, but very minor, not really consequential. And from our point of view, the budget, it's going to be interesting in the sense that, it's the incumbent finance minister's first major budget. And clearly it's a fairly challenging atmosphere for the government. So it's going to be an interesting budget to see in terms of what sort of posture the government takes and, the implications over the next 3 to 4 months, particularly on macroeconomic factors like interest rates, which is really concerning to the equity market. So I think that's something that we look forward to. But by and large, we don't think the budget itself will be a sort of defining moment for equity market trends.
Naganath, Anup spoke about this being the year of alpha, but how are you dealing with beta right now in most of your funds in terms of being positioned for the moment in a tactical sense, whether towards high beta or towards more of defensives in the current environment?
Maybe they should answer it. Anup.
Sure. I think, again, then what we've seen is beta has been changing quite significantly in terms of what is high beta and what is not high beta. Capital goods was very high beta a couple of years ago, and that clearly doesn't seem to have the same beta anymore. So it's not, again, specifically just beta that we're looking at. As I said, it's more sector selection. So for instance, let's take the case of banking, which is 25% of the index, very large, important sector with excellent long-term prospects, we think. So banking is something that, given its weight in the index, will be a fairly active mover around the way the market behaves. But that's a very interesting sector for us to look at, and we're inclined to be positive into any corrections in the banking sector. So it's more sectoral. I think the betas keep changing from time to time. So commodities and banking has probably been the highest beta elements of the market in the last 1 year. But as time passes, there are other sectors that start performing as well. At this point, we have a fairly broad-based mixed. We have some element of diversified, largely through the pharmaceutical sector, which we've been bullish on for a while. And banking is also a fairly large exposure for us.
Naganath, if your view is that the first half is choppy and the second half is more constructive, do you see the market heading anywhere close to its old peak by the time the year is out or drawing to a close?
Now, when I say choppy, I'm referring to external market conditions, especially in the developed countries, which are now grappling, as we all know, with higher fiscal deficits, sluggish growth, and so on and so forth. So I think, and where the trajectory of the economic recovery appears to be somewhat slowing down, and I think there are now people who are worried about the possibility of the recovery actually becoming very sluggish. So under such circumstances, I believe that developed countries' stock markets could be under some degree of pressure in terms of being volatile, but that again will contribute to more flows in search of growth. And as we all know from what we've seen in 2009, that will mean that more money will head towards Asia, towards India, and that is going to be a positive for our economy.
Thanks, gentlemen, all of you, for joining in. Congratulations once again. I hope we speak again next year. Congratulations to the DSP BlackRock team. Let's take a break on that note. When we come back, more market perspective, this time from Credit Suisse on how they are mapping earnings and